Last week, I showed you guys a big trade that I caught on the euro dollar. And well, this week, I want to share with you two potential trading opportunities that could be even bigger. Hey gang, welcome back to another Forex market preview video. If you are new and this is your first time stumbling across this channel, my name is Akil Stokes. I am a professional trader, right? The professional means I'm awesome. I'm also the head, couldn't even say that with a straight face. I'm also the head trading coach over at TradeEmpower.com, and this is a weekly trading video that I do, giving you guys some insights on what I'm looking at in the market for the week ahead, and hopefully leaving you some tips on that will help you become a better trader, help push you along that path of trading success or attempting to find trading success. It is now officially September, which means our summer is over. Usually I'd be popping champagne bottles and whatnot and celebrating. The summer is typically a slower time of trading where we sludge through the markets, we get bored, and we try our hardest not to force trading opportunities, because that's what a lot of traders do when you look at the charts for hours on hours and there's nothing there. But this summer has actually been a little bit different. This has been one of the best summers to date. And in our syndicate program, we have made over 1,300 pips, over a 25% return on investment over the last 3 months. And I can't believe I'm saying this, but I'm sad to see summer go. But don't worry, fall is coming. It is September. Typically the markets step their game up. They become more active in the fall as we get into our last 3 months of trading, really the final stretch of the year. So I'm excited to see what we can keep producing, and I know Jason Greystone is feeling the same way. Now, the first pair I want to talk about today is the pound yen. And pound yen, this has been a pair that's been on our radar for a while. It's been a pretty decent pair. In fact, if you've been keeping up with the videos that we do here on the website, Jason Greystone and myself both shared a trading video that we did of a trade we caught 2 weeks ago on this pair. But today, I've got something different for you. And well, before we get into it, I want to start off by showing you a video that we put out to our syndicate members last week that will kind of set up the rest of this trading opportunity. So take a few minutes, watch this video, and I'll be right back and I'll add on to it with what I'm looking at for the week to come. Hey traders, Akil here. Welcome to another syndicate video. Welcome to another week of trading. We're almost done with our summer trading. Although summer trading hasn't been that bad this year, I'm excited to see what September has to bring. Typically September is when the markets start moving a little bit more. We get into kind of the last 3 months, September, October, November, of trading for the year. This is a non-farm payroll week, which means this Friday we have our non-farm payroll report along with a few other job numbers coming out. So it may be a slower week tomorrow. What's the day? Wednesday? It may be a slower day tomorrow. I'm 1 day behind because I wasn't here on Tuesday. But it may be a slower day tomorrow as the market starts to anticipate the jobs number. Now, the two pairs I want to take a look at tonight are going to be on the pound yen, and the other one's going to be on the New Zealand dollar. The pound yen, I shot this opportunity through the trade floor this morning, but I just want to give you, walk through it again, just to give you my full perspective on this pair, because we talked about it a little bit more in depth in the live room. So bigger picture here, pound yen has been in consolidation, right? You can see price action has been putting in essentially equal highs right here. However, we've been putting in higher lows, right? You can see these two lows are essentially equal. Then this previous low is higher. This previous low has yet to go lower than the one before it. And typically this sets up for a breakout to the upside. So although we are technically in consolidation, if I had to pick a side to have an edge towards, it would be towards the bullish side. So that would mean projecting a continuation up towards our previous structure highs. Maybe we bounce off again, who knows? But eventually, until price action tells me otherwise, a breakout of this level. And I want to say that because it's kind of gonna go basically against what I'm about to show you, which is our bearish advanced pattern formation. So what we're looking for in the lower time frames is a trading opportunity right inside this level. And let's actually bounce down there first, and I'll show you the bat formation. Again, this is on the trade floor if you guys want to see it. But you can look at this on the hourly or the 4 hour. Valid on both, but essentially we're looking at a swing high right up here at about 143.20s. X to A to B, B to C, and then a CD completion right up here for the bat formation. And what happens is a lot of traders they'll do their top down analysis. They'll come down to the lower time frame and maybe they'll get scared, right? In a lot of our training, I always teach traders to form a confirmation bias. Excuse me. Everyone wants to call me. Sorry, I can't answer you. When the traders that I work with that come through the training course, when we teach them top-down analysis, I teach them to form a confirmation bias. Many of you guys have probably heard of the IPDE process, right? Identify, predict, decide, execute. I teach them to form the confirmation bias by the first half of that, right? The identify and predict part. And then your decide and execute is just working on that bias. And sometimes it gets confusing when you do your top-down analysis and your top-down analysis is screaming long, 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 bullish, bullish, bullish. And then you go down to your lower time frames and you have a setup that is bearish. Now, for advanced pattern formations, I'm a firm believer that it's always good to take your higher time frame analysis into account, but you want to trade the pattern no matter what. The pattern is the pattern. It's enough on its own to make a valid signal. But for you guys that are concerned about taking a bearish pattern formation in what could potentially be or can turn into a bullish market, here's what I want you to think about. So the market doesn't always reverse and stop on a dime, right? It doesn't always just create a nice V bottom like this. This is an example of a V bottom, but the market doesn't always come down here and just reverse right away. Sometimes it puts in more of a traditional kind of test, retest again before breaking up higher. Example is right here. You can see the market comes down, we consolidate a little bit, we test lower, we test these highs, those highs hold, we try to push lower again, right? This time the sellers can't hold it and the bulls take over. And sometimes when we do this, we form what are called head and shoulders patterns, right? You can see one right here where price action comes down, test the level, we retrace back up, right? The sellers are still in control, the selling pressure is still in control, I should say. We probe lower, and now we're retesting those highs, right? This can, of course, just go straight back up. We never know, right? The market does whatever it wants, whenever it wants to, but we can also have something like this, where the market puts in this traditional reversal pattern, the head and shoulders formation before extending up. And if the market were to do that, guess what? That would mean that our bat formation, we draw this back in, would actually achieve targets, because the target level, the traditional target ones for this trade, are going to be right above the B leg. So I bring it up just for you traders that are maybe newer. You're still learning. You're watching this not to copy the trade, but you're watching this to learn what we watch, and you may be getting confused over how we can look bearish and bullish. Keep in mind that as a counter trend trader, all we're looking for is this small piece of the move. We're not looking for a full move all the way down to create newer lows. We're looking for a small piece of the pie. We're looking to get out, and then we're looking for the next opportunity. So we were able to hit targets on that trade to end the week, and it was funny. It was just in time. This past Thursday, I put out kind of a performance review for our syndicate members where we took a look at the month and we broke it down by pairs, win losses, and really just looked at how our syndicate has been performing over the month, year to date, and then since we've started the syndicate or started tracking trades in the syndicate, which was back in 2015. And it was great to have a big winner, 115 pip winner, happen right before I put out that video. You know, pad the stats a little bit, right? Make it look good. But what I'm looking for next is a breakout above this level. Now, I'm not saying that price is going to break out above this level. That's very important. Each and every week when I do these videos, we have the trader that just, I don't know, I don't even want to say take it too seriously, but I'll say stuff like, hey, there's a potential break to the upside. And I'll get a message that says, Akil, I just bought it. What should I do now? And I'm like, well, why did you buy it? Well, you said it was going to be a break to the upside. I said, no, it's a potential break to the upside. Oh, well, what do I do with my trade? And I give them the same answer, right? If you're ever in a trade that you don't want to be in, you want to exit immediately. But it's amazing each and every week, like clockwork, that comes in. So it doesn't mean that price action is going to break this level, but if price action is going to break this level, then we want to be aware of where price is likely to go next. And the next level that stands out to me is going to be this level right here. Is going to be 144 even, right? A nice psychological number right here. And it may not look like much on the 4-hour chart, but if I zoom out a little bit, and even if we bump up to the daily, you're going to see price has hit this level a few times in the past, going back all the way to earlier in the year. And you can see more recently too, it's a level that found support, a level that found resistance, and has bounced really back and forth a few times. So that's the first level that I would expect price action to go to if we do get a breakout. The second level is going to be a little bit higher, and this is going to be more like your traditional head and shoulders trading, where the first thing I'm going to do is take an equal measured move from my swing low here to my swing high, and I'm going to copy and paste that move. So I'm going to copy or clone it. I'm going to drag it on. I'm going to say, well, if price were to make an equal measured move here, where would that take us? An equal measured move. This is essentially an AB equals CD pattern. Same type of deal there. And I can see that level, that 1-to-1 measured move, is going to put me up at 145.20. Well, then I'm going to take my Fibonacci extension tool. I'm going to drag it from my swing low to my swing high here and back down. And you can see that, look at that. I get a little bit of confirmation at that level. Not only do I have this 1-to-1 measured move, but now I have a 1618 Fibonacci extension level as well. And the 1618 is the more powerful of the two Fibonacci extension levels that I used. Now, lastly, I can take a Fibonacci retracement tool, right? So we're showing you guys how to use fibs here. I'm going to take it from my most recent swing high, which is right here at 146.80s, to my swing low down here at 139.31. And you'll see that I have a 786 Fibonacci retracement level on there as well. So again, fibs aren't magic. I think I mention that every video now, because we always get the person that wants to type in the comment box, oh, this Fibonacci voodoo, you can't just trade on fibs. And it's true. You can't just trade on fibs, right? I guess you can. I don't advise trading just using fibs, but you can use them to help add clues to your analysis. When you have multiple Fibonacci levels lining up at the same price point, and when you have other things lining up there as well, like our AB equals CD pattern, they start to become more powerful as a whole. Again, we are detectives. Our job is to find clues. Our job is to put those clues together and kind of come to make the best prediction that we can in the market. So not a bad level to look for here. Obviously, there's a few different ways to trade this. You can, if you're a breakout trader, you can trade the break of this level. So waiting for price action to break and then look to buy it on the way up, right, as it breaks out. Or you can wait for the break, see if we get a retest of structure, and then of course buy the retest, more of like a traditional trend trader, more pullback trader, I guess you should say. So that's what I'm looking for here on the pound yen. The next pair I want to go to is the dollar Canada. And the dollar Canada, this has been probably my pair of the year so far. Aussie Canada is always nice, but dollar Canada has really been my pair of the year so far. And I want to give you some history, because we've been, I know many of you guys are new to this video, but we've been watching this pair throughout the year. And if you've been a member of our syndicate program, or if you're in our live room, you know exactly what we've been catching here. But it all started really with an idea being proved wrong, right? Back when, a long time ago, right? Once price action broke this level early in April, I was looking for a bullish move. I was bullish on Canada, waiting for a pullback and waiting for an extension, very similar to what I just showed you on the pound yen. However, price action had a different idea. And this is one of the reasons that we don't want to be stubborn in our thinking, right? A lot of traders, ego comes into play, and when they're thinking bullish, the market has to prove them right. It has to prove them right. And guys, remember, the market will do whatever it wants whenever it wants to. Our job as traders is to simply participate in the market, right? So it's okay to have a shift in idea. You may think bullish one day, you may think bearish another day, all based on what price tells you. And that's part of being adaptive as a trader. And as soon as we didn't get this pullback, right, as soon as we broke past this structural level down here, right, I did get a little long opportunity back here. I didn't really do anything. I think I got stopped out for break even or made a few pips on it. But after we penetrated and violated this level down here, my bias shifted from being bullish, bullish, bullish to bearish, bearish, bearish. And we actually caught a heck of a move here multiple times from this level all the way down to our previous structure low. Then we came back and we caught some more of this from our break and closer structure here all the way down to these lows. And if you go back and watch the videos a few weeks ago, right, the break and close below that level had me thinking trend continuation, trend continuation, trend continuation to the bearish side. And it's not really fancy what I'm doing here in making these projections, guys, and making these predictions. It's just knowing how to read a price chart. If you know how to read a price chart, it's not that hard to go through it, at least the first part of that IPDE process. Identify, predict, decide, execute. If you don't know what I'm referring to, just, I would advise taking some time, heading over to our website, tradeempowered.com, and watching that Into the Gray video where we talk about how to read a price chart, our rules for identifying trend, and of course, IPDE and a lot more as well. But the first step to any trade, right, is making that prediction. So if you can't read a price chart, if you can't make that prediction, excuse me, it's going to be very hard to consistently find trading opportunities. So the break and close below this level had me thinking short. However, the market didn't immediately go short. And what happens is, understand the market doesn't go in the same direction forever, right? It ebbs and flows. So you just look at the past history in this chart. And when you see price action not continue bearish directly and put a little retracement up, it doesn't necessarily mean the market is bullish, right? This isn't a bullish dollar versus the Canadian dollar yet. This little blip right here is just simply what? A little pullback. I mean, look at the move that we put down, guys. Look, we came all the way from basically $1.38 all the way down to $1.24, right? And you don't want to overreact over a simple pullback, right? This isn't, it's a very, very small move. But anyway, I was attempting to catch moves in here for the last few weeks. And if you've been in a live room, you know that we've been very, very, very close. We've been making the right predictions. We just haven't been able to get involved, meaning that the market has been making its move. Right? Canada's had a lot of news out lately. The market's been making its move before or just not giving us a reason to enter. So that's kind of stunk, but I always tell our traders that at least tap yourself on the back. If you make a prediction, if you're unable to catch the move, at least tap yourself on the back and say, hey, at least I made the prediction right. It doesn't help right now as far as growing your account, but in the long run, that confidence of knowing that you're doing the right thing, that's going to pay massive dividends. But our most recent move is a lower low, lower close, right? We finally broken and closed below this level, thanks to the non-farms and a few other reports that came out this week. And now, once again, we're setting up to look for that bearish trading opportunity. So what I'll be looking for here, and it's really, really early in the game on the hourly, is a move back up to this level of structure, right? A move back up to about 124.50s, this zone. And this zone is going to last from about right here to right there. And that's going to be my first kill zone for where I'm looking for a short opportunity. So obviously the market's not there yet. The market may not get there, but with these ideas, what we want to do is we want to set these ideas up in advance. That way we know exactly what we're looking for. One of the biggest mistakes that traders make is they don't have any consistency. They don't have any routine to their trading. So they come into a market at a random time on a random day and they just kind of hunt and peck around. And it's going to be very hard to be a consistently profitable trader when you're not even doing your analysis consistently. So one of the biggest things that I think you can do to help your trading is just develop a routine. Be consistent in your approach to the market. Be consistent in your analysis. Come in each and every day, do your analysis, write notes, and prepare, right? Go over how you're going to handle the situation. I'm a former college football player. I remember what we would do all week. We'd practice, right? We practice play after play after play. And then the day before a game, we would do a walkthrough, right? So we have no idea what's going to happen. We would sit there, we would close our eyes, and we would just walk through different scenarios. Okay, if the defender does this, here's how I adjust. If the quarterback calls this audible, here's what I do then. And you want to do the same thing in the market. Visualize what you're going to do. If price action continues up to this level, how am I going to take advantage of this? If price action puts in let's say a flag or a pennant formation down here, how can I take advantage of that opportunity? And keep rehearsing and rehearsing and rehearsing those ideas and those thoughts every day. And that way, when the market actually makes its move, you're not going to be caught off guard. You're not going to be sitting there going, oh, what do I do now? What do I do now? Panic, boom. And you just hit a button. And you're like, oh, right? No, you're sitting there, you're cool, calm, you're collect, right? And you're like, okay, well, I've played this out, all right? RSI went overbought. This type of candle formed. Now I enter. Here's where stops goes. And I promise it's going to make your trading life a lot easier. All right, sorry about that, guys. I just went on kind of a rant, and I forgot to finish my analysis here on the dollar Canada. I don't know how I'm going to edit this in, but I want to show you real quick just the potential that is offered on this pair. This is, again, these videos are non-scripted, so these, it just, whatever comes out my mouth comes out my mouth. But the potential for Canada here, now that we've broken and closed again below these lows, really our next level is all the way down here at about 122s even. So we can come to about $1.22, and then eventually a little bit even lower to, I would say, about $1.20. So you can see there's a lot of potential in this move here on Canada, which is why the shorting opportunity is so exciting for me. So again, I'll find a way to edit this in, and it's going to seem like an awkward transition somehow, but I just want to finish up this analysis because I think that's a pretty decent, a pretty important part to put in there. This is probably one of the biggest comments or compliments we get from our live trading room and our syndicate members is that being in the zone, right? Kind of being with professional traders on a daily basis where we're just going over the same trading opportunities over and over and over again, it really starts to build confidence. That repetition, that being in the gym, right, really starts to build the trader's confidence and makes it a lot easier to execute trades. So two opportunities right there for you. And, hopefully, obviously we'll be following this throughout the week, but hopefully we can find some trading opportunities on these pairs. Now, realize, guys, I mentioned it earlier, summer is over. We're in the final stretch of our trading for the year, which means we've got about 3 good months of trading left. We got September, October, and we've got a little bit of November, about half of November. So if you are currently at the point in your trading right now where you're looking back on the last 8 months and you are not where you want to be, right? You had these big goals at the beginning of the year, and now you're looking back like, man, I've done nothing to achieve those goals. There is still time left, right? You have to do something, take some action. And I think the best thing you can do is involve yourself in a positive atmosphere, right? Spend some time in the live room, right? Take the 1 week free trial. Invest 3 hours a day to spend with a community of great traders and great trading coaches. See if that can help get you on the right track. Not only learning about the markets and what we're looking at, but mentally as well, building confidence and seeing what you have to do, right? What successful trading looks like. And if you don't have that free time, I know many of you guys have full-time jobs. If you don't have the free time to spend in either the London room or the New York room, join the syndicate, right? It's not going to be as hands-on as trading 3 hours a day with us, but you get your morning war room meeting. You get video updates from me on almost a daily basis now that I stopped producing the trading blog video. So stay involved. Use that as your training. Use that as your way to stay in the trading zone and see what effect that has on the markets and on your trading. Again, our live rooms, we have 1 week trials for both, so you can take 2 weeks free, right? One in London, one in New York. And for the syndicate, as of now at least, we still have the 30-day trial for $1. So spend a month in there, commit to that routine, and see if it has a positive effect on your trading. And if there's something else you want to do, do something else, but you have to do something. You can't just sit back and think that things are going to change on their own, right? You have to earn your success, and earning your success takes a lot of time, a lot of energy, a lot of effort, and a lot of hard work. And you have to put yourself in the right situation to do that. So that's the best advice I can give you for this point of the year. Again, I get these emails and messages like clockwork. Hey, Akil, trading isn't how I want it to be. And I always say, well, what are you doing about it? And they're like, well, nothing. And I'm like, well, then what do you expect? If you're serious, you got to do something about it, and you got to do something about it before your time is up. Because I'll tell you what, there's no time limit on success, right? It takes different people different amounts of time to be successful. But there is a time limit on life. And the last thing you want to do is push the can or kick the can 10 years down the road and realize you're in the same exact position you were in 10 years ago, and you've wasted time. So do something, or at least if you're not doing something, don't shoot me emails complaining about it, because that's the answer I'm going to give you. Do something. If it's with us, that's great. I'd love to work with you, but if it's not, do something, right? But you got to change things around if you're going to be successful at trading. So I hope you guys enjoyed this video. Transformation members, we're in a holiday this Monday, so no strategy lab. I know it pains me. It's my favorite day of the week, right? Don't tell the rest of these traders. Mondays are my favorite day of the week, but we'll be back Tuesday in the live room. Obviously, we'll be back in the syndicate as well, Tuesday through Friday. And I'll see you guys then. Until then, plan your trade your plan. Do me a favor, hit that like button if you're new and you like what you see, subscribe, or at least watch 10 more videos to get a clearer view of the content that we're bringing on this channel. And until next time, you guys have a great week of trading, and be safe this weekend. All right, traders, so I hope you enjoyed today's video, and if you did, please show us by hitting that like button and subscribing by clicking the button right below. If you're looking for more educational content, feel free to head over to our TradeEmpower.com website, or also take a look and you'll see more videos available for you. Have a good one.